unless they want to bring an intensity to the game to make a decision and start evaluating businesses. But once you're in the business of evaluating businesses and you decide that you're going to bring the effort and intensity and time involved to get that job done, then I think that diversification is a terrible mistake.
That's interesting. I'm Skylar James. Welcome back to the channel for another Stuff Buffett Says. Isn't it well known that money managers can't regularly beat the S&P 500? I mean, sometimes they do, sure, but not regularly, not predictably. Kathy Wood, once in a while success story, isn't uncommon, but check out these recently released stats from S&P Global. They cited that in 2020, for the 11th straight year, the majority of large cap funds underperform the market. And not since over a decade ago, have the majority of funds outperformed the S&P 1500 in a year. So what's the takeaway? It's that we shouldn't get lost in the marketing and the FOMO of money managers boasting about outperformance. But also, doesn't this data contradict what Buffett said? That investors should own index funds unless they're in the business of evaluating business. Well, Warren, old buddy, these money managers are in that business and they aren't doing so great compared to the index. Looks to me like holding 1,500 stocks in a cheap cap-weighted basket will most likely outperform whatever portfolio these business evaluators throw together. Doesn't it look that way to you? Then again, maybe Buffett was only referring to himself in this line of wisdom because his Berkshire Hathaway has a history of handily outperforming the market. Even if we discount the first 40-some years of outperformance, Berkshire is doing better than the S&P 500 for the most recent decade too. At the same time that the majority of fund managers are underperforming it. But set aside Buffett's success, let's find another business evaluator who is winning. I just want an example of how Warren was right without including himself. Enter Bill Ackman. If you aren't familiar with him, he's a big-time hedge fund guy, a Wall Street legend with some noteworthy investment successes to his name, and some pretty notable failures too. This has led to a lumpy chart for his fund, Pershing Square, over the long haul. But I'm most interested in his recent performance of, again, evaluating businesses. Get this, in 2020 alone, Ackman's fund returned 71%. 71%! You want to know what's even more impressive than just the final percentage? He did it in only 8 holdings. 8! That's practically monogamous investing. Well, it's 8, so it's octogamous. Let's call it Nostradamus. He picked 8. Anyway, it's down to 7 holdings now today, but it was 8 during 2020. Ackman's performance with such a limited number of stocks is, I think, a testament to what Buffett meant when he said good business evaluators don't need diversification. And I also think that this betting your hunch mentality is what the professional money management scene today is missing. It's not there anymore chasing these hunches. It's all about fees. Keep collecting the fees, lure new investors with watered down growth and value funds, and hope that they don't notice you underperforming. Hope these investors don't find out how much money they'd save just buying ETFs. Hope your clients feel like they're getting value by deploying credit swaps and short positions in the fund. The point is, these funds are going to generate millions in fees, regardless if they stink or not. Back to the Buffett advice. He told us to stay the course with indexes unless we're in the business of evaluating businesses. Good advice? The first part, yeah, definitely. Indexes outperform custom portfolios. Check. The second part, Warren himself does okay evaluating businesses, but the rest of the field, not so much. Bill Ackman's 2020 aside, and is the advice something that Buffett himself follows? You betcha. A master business evaluator. So, how have you all fared in your investment choices and portfolio building? Are you in the business of evaluating businesses? Let me know. Thanks for joining, and I'll see you on the next